This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. It's a Tuesday morning. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Tuesday morning, and looks like it's going to be a good one, right? Given what we saw yesterday and perhaps some follow-on buying this morning as well. Fingers crossed for the bulls, but not too bad.
Well, not too bad. And, it's a Tuesday and it's Teachers' Day as well. So wishing all, teachers and everyone who teaches us in some way or the other a very happy Teachers' Day. And to both of you guys as well. I mean, we learn from each other every day. We know when the mood is good, when the mood is bad. And we help each other out. So happy Teachers' Day to both of you guys.
Absolutely. Happy Teachers' Day. I learn from both of you every day. And I think we learn from our viewers, our followers the most, right? I mean, the kind of feedback that you get, especially in today's day and age of social media.
It's not one way, it's two way, right? And I think that we are the better for it in that sense.
Yes.
So absolutely. So, I mean, wishing all of you a very happy Teachers' Day. And, it's a special one in schools and kids. And I mean, I remember Teachers' Day when I was in school. I mean, it used to be, a lot of fun.
You know what? I know this is going to sound like a big cliche, but the market is our biggest teacher, right?
Yes.
I mean, you learn so much every single day from the market.
Absolutely. And the day you stop learning, that's doomsday, right? So you speak to the biggest voices. They say, this market teaches you something every day. It tames you down at times. And at times, it takes you to the sky.
Absolutely.
Well, let's just then quickly kickstart the day with what you need to know as far as the trading setup is concerned. Well, we got a decent follow-through yesterday, because Friday was, remember, a completely up and up kind of a session. And yesterday, it was imperative that we saw some follow-through. It looked a little shaky at start yesterday. I mean, because after a decent open, the market sold off to the low point. And then there was a recovery, which really did not stop after that. The Nifty ending about 0.5% higher. So it's very decent. We've closed above, basically the upper end of the falling channel, which we highlighted yesterday. So that's the resistance level I'm talking about. We've closed above it. Okay, not very much from overnight, right? In terms of cues, US markets were closed because of the Labor Day holiday. So very, very quiet kind of session. Nothing in terms of treasuries. It was a bank holiday as well. European indices also, by the way, for the lack of what happened in the US, we're looking at Europe. But if you look at what happened from the day's high, indices all sold off. A composite European stock measure, the Euro Stoxx 50 index, that ended absolutely flat, but off the highs. Now, oil prices are holding, and I think that's the big worry as we start another session. We are at about 89, so we're closer to 90, right? And 90 is a big, slightly sort of scary kind of number, and you don't want prices to push very much higher from here. You want a bit of a cool off. So far, the market has kind of completely ignored what's happening to oil, but that's the biggest macro variable for us, and it can swing sentiment either way. It's always been true, and it's true even now. So, watch that one very, very closely. This morning, by the way, I was looking at, Treasury futures, etc. Indication is that US yields will start about 3 basis points, 4 basis points higher. So, again, that's the other one. Now, coming back to levels and tying all of this in, on the Nifty, on the way up, the upper end of the daily Bollinger Band stands at 19,633. So that's the first level. We are at 19,530 right now. Exactly 100 points away is the first resistance level, which is 19,633. And then, of course, we talk retracements of the entire fall. And this is the level we put out the last 3-4 days. That stands at the golden 61.8% retracement of the entire fall is 19,700. Support comes in at about 19,460. Something closer by, basically. Otherwise, the band has been 19,250, 19,230 to about 19,550s, but that's slightly further away. So, this is a working support level, which could be about 19,460 intraday. Now, Bank Nifty, it closed slightly above the 40-day exponential moving average, just a little bit. That stands at 44,517. We left off at 44,578, right? So, just a bit. So that's the first level. On the way up, though, resistance will be all retracements. This is the 38, 50 and 61.8% retracement of the entire fall from the July high to the August low, which is 44,660, 44,985 and then 45,312. Same number, the retracements don't change because the highs and the lows don't change. And we put these numbers out before as well. Supports can be kept at between 43,800 and the low, which is for the Bank Nifty not broken yet, which is 43,600. So broadly in that range, the market should kind of find support levels. I mean, it's a constructive screen, not very much from the US. Let's just have the GIFT Nifty open, 20 points, neither here nor there. The pace on the small cap side only picked up. I mean, we were talking about same time yesterday, the small cap index gaining 4.5% last week. Yesterday, it was up another 1/3%, 1.4% or so, the Nifty small cap index. So, that's the space to really watch out for. And so much happening in that sort of spectrum, so many stocks, so many companies really getting re-rated. Sonia.
Absolutely, and that's been where the action has been, right, over the last many days and months. But today looks like, at least for starters, we would perhaps try to build on to the gains that we saw. Remember, the sensex and the Nifty closed at 1-month highs yesterday, and there was quite a bit of traction, actually. So the Nifty conquered that 19,500 mark yesterday. And, in the last 5 trading sessions, right, the Nifty is up about 1%. So there has been some amount of traction on the upside. Very interesting to see if we can build on to our gains. A couple of levels that I'm watching out for. The earlier high that we crossed was 19,632, and that's the next level to watch, which was the high on the 9th of August. Of course, after that, you have 19,800, 19,900. But this is the first mark on the upside that the Nifty will look to conquer. A couple of things to watch. IT, metals and cement stocks were the big gainers yesterday. And in that context, some of these stocks, whether you look at HCL Tech, whether you look at Infosys, right? HCL Tech is up 8% in the past 1 month. Infosys is up about 5%. Wipro is up about 5% in just 1 month. And in fact, if you look at the chart of Infosys from the lows of around 1,200 that it hit in the month of April, it's now almost back at 1,500. So there's quite a bit of ground that, a lot of these stocks like HCL Tech and Infosys have climbed in the last couple of months. That trend perhaps could continue. There was big buying from domestic institutions, not just yesterday, but in the past 2 trading sessions. DIs have bought almost 5,000 crores in the past 2 trading sessions. And as I said, a couple of these names in the IT space, etc., will be closely watched. Cement has started to pick up as well. So all eyes will be on that. But give and take everything, it's been not too bad, actually. We've been climbing slow and steady. Let's see if we can continue to hold on to 19,500.
Well, Sonia, if Friday was the party, then Monday was the after party, right? And Prashant just celebrated his birthday. He was telling us what a great time he had on that one particular Saturday night that he went out to party.
We were not invited.
And there was an after party after that. And that's why he said the night was absolutely perfect. So though we were not invited, maybe there is something.
Why don't we get invited for these parties?
This is all hearsay. This is all hearsay. Don't believe a word.
All right. Well, getting back to the markets, that yesterday was the after party, and the after party looked quite good. The Nifty IT index, that's the one that's outbeating the other couple of indices because it's making fresh all-time highs. Irrespective of what exactly is happening in the globe, there are fears. The commentary may not be that great. IT index making fresh all-time highs. The Nifty Bank, well, that's around 4% away. Now, there was a bout of short covering that did play out on the Nifty Bank yesterday, but still it's underperforming a little bit. And even in yesterday's trading session, well, it was a relative underperformer if you compare it with the performance of the Nifty itself. So yesterday, the open interest down by close to around 5% on the Nifty Bank, and that's the second day running. You have the total open interest that is lower. The desired result, though, is not coming about. You're talking about the total open interest on the Nifty Bank coming down by close to 12% in the first 2 days of the series, but the desired result still remains elusive. Maybe, in fact, it's bracing for a bigger upper move, but as of now, it's relatively underperforming. The FIs as well, they are light in their positions, both on the long as well as on the short side. And the total open interest, the gross participation from the FIs, it's the lowest we have seen all the way since the middle of June. So the positioning from the FIs is relatively light. There could be a couple of reasons out there. You had 2 big corporate actions, that's the Reliance as well as HDFC. So the Nifty open interest could have been relatively higher because there was a hedge being used out there. That, be that as it may, it's still very, very light positioning from the FIs. In yesterday's trading session, well, on the option side, you had mixed data coming in. So they bought calls big time, but they also wrote calls. So that data point is a little bit mixed out there, not giving you any big direction. In an uptrending market, though, you want to see put writing. And yesterday you saw that 19,500, 19,400 put, both of them were fairly active. Now, the crucial support zone is around this 19,400 to around 19,450 level. The 20 and the 50 DMA comes in around them. And yesterday we rebounded from there as well. So if you're looking to buy the index, then that becomes your near-term stop loss because that's the support zone. The Nifty Bank, though, that's been facing resistance at around 44,800 to around 45,000. The 50 DMA comes in there. The recent high as well is around there. So you'll want the Nifty Bank to at least test that level and try to move higher. Today as well is the Nifty Financial Services Index. So we'll keep an eye out on that index. For starters, we pull back closer on 25 points. I think at some point of time, it does get bought into. But you'll have to watch that level on the downside of 19,400, 19,450. That's a crucial support zone. Upside, well, we could be heading to around 19,650.
Well, that's a setup and what you need to know as we begin another session here. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Arvind Sanger is our guest on the show from Geosphere Capital Management. We'll be talking global stuff with him. Our research team will get you CNBC TV18's list of stocks to watch for the day. At 8:30, Siddharth Kemkar of Motilal Oswal Financial Services joins in with some fundamental talk.
All right, well, let's kickstart the show then with some opinion coming through. First up, we have Chetan Seth of Nomura, who says that despite risks of a US slowdown, a mild recession, he sees some value in Asian stocks at these levels and expects a mid-single-digit returns from spot by the end of the year. He says the key downside risks are a long recession in the US that affects Asian chip sector earnings, China's support failing to revive corporate earnings, and that US-China tensions could escalate. So these are the risks. He adds that the upside risks are a US Goldilocks scenario and China recovery strengthening due to unleashing of savings and a stimulus.
Okay, Vikash Jain of CLSA sort of weighs in on the high-frequency data, economic data points. He says that more than a third of the core indicators for the month of July point to a notable beat of the quarterly growth expectations, while less than a fifth hint at a significant miss. He says industrial indicators were strong, driven by an improvement in manufacturing and infrastructure activity. He adds consumption activity was the complete opposite of the previous quarter, with some indicators of rural demand suggesting green shoots, even as other growth trends remain healthy. He goes on to add that early indicators for August are indicating month-on-month growth seems to be moderating now.
All right, let's also get you some money market views then. We kickstart with Abhishek Goenka of IFA Global, who says that global risk sentiment has experienced a slight uptick thanks to China's consistent economic stimulus and the reduced expectations of another Fed rate hike. However, he adds crude has inched higher due to the voluntary supply, and any substantial increase in crude prices will add on to the inflationary pressure in India, which will cap any major rupee appreciation. In the medium term, he anticipates the rupee to trade within a range of 82.20 to 83.20 with a slight weakening bias.
Okay, on the bonds, Ajay Magnolia of JM Financial says that in the absence of any significant cues, domestic market may open a bit weaker on the back of higher yields in the US and higher crude prices. He expects the 10-year benchmark bond yield to trade between 7.18 to 7.23% for the day.
Well, we've got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at Cipla, Mahindra Financial, Hero MotoCorp, Escorts, IEX, RVNL, Vodafone Idea, Oil India, and Nazara Tech. Most of them will be reacting to positive news flow, while on the flip side, Dr. Reddy's could be the lone stock on the negative side.